Hello Trade Pros, welcome back to our channel here at Trade Pro Academy. I hope you guys are excited for yet another video, and this one's going to be specifically on volume profiles. More so the shapes of volume profiles and how you can use different shapes of volume profiles to get a better understanding of the market, where to trade, right? Specific trade areas and entries, and a directional understanding of what is to come. So I'm going to be going down through a list of my favorite different volume profile shapes on a day-to-day basis, on a week-to-week basis, so you guys can get a better understanding of how to better use these for opportunities in the market. So we're gonna have to jump in front of the screens for this one, and I'll see you guys on that side. But remember, if you're new to the channel, hit that subscribe button, hit that like button, drop a comment down below, and better yet, check out community.tradeproacademy.com for our open Discord with a plethora of free resources and market analysis on a day-to-day basis. So let's get in front of the screens and we'll talk about this more. Hey traders, what's up? We are back in action in the screens. We're looking at these screens right now, and what we're going to be talking about is the breakdown of a multitude of different volume profile shapes, right? How these shapes can be used to identify directional movement and some kind of bias. Now, when we talk about volume profile shapes, we're going to be talking about the equity markets, right? The S&P 500 and the NASDAQ, and these shapes aren't, right? They're not necessarily the be-all and end-all. Now, the main way I'm going to be looking at volume profile shapes are individual-based volume profiles, meaning session-by-session profiles. So what that means is every single individual session we'll be taking a look at it, and then those types of profile shapes, I can get a better understanding of what is going on. Now, there are a lot of different volume profile shapes out there, and what we're going to be focused on are the ones that I deem the most important, that give me the best understanding of what's going on, meaning like shapes that have reversals and shapes that have potential continuation. So I'm not going to bore you with every single volume profile shape. I'm just going to drop it down to the ones that I use most effectively and the ones that can contribute the most in terms of, I guess, high probability, not only trade direction, but trade areas. What I'm looking for are areas that I can trade from. So specifically what we're going to be doing is breaking down both the S&P and the NASDAQ on the volume profile perspective. And let's just dive into these shapes. So like I can use the NASDAQ, I can use the S&P, it doesn't really matter. We'll look at both, but let's start off with the NASDAQ here. So what we first have to understand are the two different categories in essence for volume profile shapes. The first one is going to be more of a reversal type volume profile shape, and the next one's going to be more of a continuation type volume profile shape. Now, I'll list them off here. We'll take a look at them on the screens. What we have is a general capital P, a lowercase b, right? These ones I'm more so leaning towards a potential reversal in these volume profile shapes. And then the other two that I look at are going to be like a triple distribution, right? And then a double distribution. So these are effective both in continuations and potential reversals. So these four shapes are going to be the premise of mainly what I'll be looking at and looking for, right? If these one of these four shapes appears, I can get a better understanding of what's going on. So let's put a little more focus on these ones. They're the easier ones to comprehend at first. The P and capital P and like lowercase b shape. And then we can start moving into these and see how these are created overall. So first and foremost, right, if we take a look at like, let's say a capital P shape, this capital P shape, we want to understand how it's generally created at first. So like the creation of this volume profile shape will give us a better understanding of what's going on. Generally speaking, when we have a move, right, very similar to this guy right here, we have an expansion to the upside, right? Typically, the stem of this volume profile is done with like faster pace and lower volume. That allows prices to expand higher, right? The lower volume moves on either expansions higher or expansions lower are generally to be considered not confirmatory or like confident in a sense, what I'm trying to say. Like you don't necessarily know that, okay, this like squiggle to the upside with low volume is going to be something real. You don't necessarily know right away that, oh, okay, this is a strong bid. This is a strong area that actually expands higher. At a certain point, what happens is you start to get a consolidation at the top band, which creates this balance at the high. So what happens is like eventually the buyers, they start losing steam and they start rotating about, where this allows for some kind of larger sellers to come into the market and say, you know what, enough's enough. We can stop the bidding from here. We'll try to hold this expansion, but the buy side is still trying to come in towards the bottoms of this balance like range that's getting created, hence creating this P-shaped volume profile. Now, generally speaking, what happens is that these P-shaped volume profiles are synonymous to seeing market reversals. Now, this is where you want to get this straight, because it's not like, oh, okay, I see a P-shaped volume profile, I sell the shit out of it, right? Like, there is opportunities to sell the top band of that P at the top band of that balance, but the expectation, the expected move is to the bottom of where this balance started. Overall, it's a bullish type profile. It's a bullish type profile because it expands to the upside, it does create a balance, and then it stalls out. So the immediate opportunity can be a sell from the top of the expansion and the top of that balance, but the real sell happens when we actually can break into an area where this low volume actually trades. Because then when you trade into that low volume area, again, it's low volume, so prices should theoretically pass through that very easily. So it's not necessarily super bearish until that area breaks, but initially you're looking at a reversal. Now, this is the important factor that I think a lot of people lose in translation when they see these types of shapes of profiles. Just because it's like a P-shaped profile and the balance is created at the top doesn't mean like, oh, sell every freaking rally and expect this massive reversal. Yeah, you can sell the top, but overall this bullish type movement has the expectation to hold the bottom of the balance that was created, because these buyers, they're so eager to hold out the originating move, they're going to start bidding at higher prices, which happen to be the bottom of that balance. So in essence, right, I could be looking at this shape and thinking, okay, well, as long as we're within this balance and they're trying to sell the top, if I want to see a continuation in this move, my expectation is for them to hold the bottom of that balance. Now, if they don't, right, reversal complete, everything is good. But the general first target of the top of the distribution is going to be to the downside at the bottom of this balance, where I would be hunting the long side of the market. So like if we look at this based on this day, the bottom band is somewhere over here, right? The bottom band of this balance that gets created by this P-shaped profile, where the volume drops off, where it starts to get very thin and red, right? You can see the market profile over here, about 140 to like 120 on the NASDAQ futures here, where we have this 200-day profile divot. So if I'm looking at this, yeah, sure, okay, I don't disagree that there could be some sell side, but I'm interested to see if the buyers can hang on to that balance low so we can see that continuation aspect to the upside swing. Now, it's pretty much the same thing as like the lowercase b, where we have the heaviness of volume at the bottom after like a decent little sell-off. What generally happens is like you're looking for that reversal where these buyers are stacking up against the originating sellers, and you're expecting to see prices move into the top band of this balance and then potentially reverse from there. But if we get the expansion higher, it kills this low volume and it allows prices to continue in that directional trends to the upside, right? You can see these instances on the S&P and the NASDAQ, whatever the case is, like you'll see this area right over here, right? You have this like B, it creates a lot of volume, and eventually they do hold out that volume and end up closing above, destroying all of this low volume to see that continuation to the upside swing. It's a very similar aspect over here. You have this B-shaped volume profile right here, right? It's very clear. You have the top band of the balance, you have the bottom band of the balance right here. So if I'm looking at this, right, initially I'm going to be thinking, okay, well, the bottom band of the balance, if I can line it up with some key levels, I want to be long from that area. That's the reversal point. You can see like obviously the lows and where the volume drops off. Align it with the 200-day volume drop off, and like that's my entry point to look for the long. And I'm targeting right here into this area, into the where the balance actually ends on this B-shaped volume profile, right? And at that point, I wouldn't be shocked if sell side tries to come in there. Right, I wouldn't be necessarily shocked to see if any sellers want to come in there. If we actually expand higher, what happens? You have this low volume area above that is most likely going to get cleaned up very easily. Now, if I take a look at the other shapes that we have, they get a little more complicated, right? We'll start off with the double distribution, right? You have the double B over here, right? The capital B, the double distribution. And if you divide this, it actually turns into a capital P and a lowercase b volume profile. So if you divide this, you can see, okay, well, wow, we have something interesting. So what does that tell us? That tells us that the top band of this double distribution, right, if we're trading towards the tops, I'm expecting to see some kind of failure or resistance. If we're trading towards the bottom, I'm expecting to see some kind of failure or support in terms of a reversal. And then the targets on both these are going to be the midpoint of that double distribution to begin with, right? And just like you are in any different area of this, like imagine we're at the top band of this, right? And they sell off here. My anticipated understanding is going to be, okay, well, you have a volume drop off there. We have this nice expansion. The midpoint where the volume kind of coincides is the point where I would expect the continuation of this upside move to happen, right? Likewise, if I'm like, let's say we get like a long here and it pulls up, my target is going to be initially the midpoint of that area, double distribution. And then I'm going to be looking for that turning point potentially to see if we can continue that downside sweep. So if I'm watching this, right, I don't necessarily see that many right here, so let's move along. So I moved over to the S&P because on the Nasdaq I looked, I didn't find any double distributions. I'm like, that's an important thing to bring up, because these volume profile shapes, they're not going to be like everlasting every single day. You're going to find some kind of volume profile shape and opportunity that looks as such, right, that creates a specific, right, either PB, double B, or whatever the case is. So like when they do appear, that's when you want to put notice into them. Otherwise, like it doesn't necessarily give you that kind of opportunity to play on these shapes. So if I look at this is the ETH session profile. You have a double B distribution over here. So if I'm looking at this thing and we're kind of closing in the midpoint, I know that there should be some kind of support structure at the bottom band of this, and there also should be some kind of resistance structure at the top band. So the best way I could play this is like, I want to be a buyer at the bottom band of this and see how we trade into the middle. If we trade through into the middle, my expectation is that we fail into this high. So both sides of this actually trade on the next day. Now, we look at this on a different scale. And again, like these things, you want to take other confirmation tools with you. You don't want to just like blindly trade them and just like overexert yourself trying to say, oh, okay, well, it didn't trade exactly in the middle. It didn't fail, or it didn't do this. These are concepts that you can take to better your understanding from a larger perspective to add into your arsenal. So if I'm looking at this like double distribution over here on the S&P, you have like a lot of volume at the top, right, over here. You have an initial failure down. We trade into the middle, and we eventually trade into the bottom band of that double distribution, which is typically going to be some kind of reversal that allows prices to reverse, right? If you don't see it fully, what we can do is just like divvy this guy up, and you can see off the open, right? This is how it works. Right off the open, this is a period over here. This is where markets open into the top of the double distribution with heaviness of volume. It fails ultimately. It comes down to the bottom band where the volume drops off of the bottom of the double distribution, and we reverse back to the upside. We stall a little over here, and what happens is we actually get pullbacks to allow us that continuation. Now, the triple distribution, the final one, is pretty much a continuation scenario, a continuation type move. And there's a good example here on NASDAQ as of recent, right? A triple distribution, if we look at it at face value, it's like three bellies on the bubble over here. And depending on where you are, the probability of, if you're on either extreme, right? This is one of the cases. You want to keep this in mind. If you're at either extreme, the top or the bottom, the probability that the middle distribution holds either resistance or support structure is extremely high. So when I see these triple distributions shape up, it gives me that much more of a push and an understanding that I could be playing off of this as some kind of continuation move. So this is perfect today on NASDAQ. This is a great example that we actually traded in our room in the morning. We have like a triple distribution that shapes up like this. So we're towards the top band of the triple distribution in this final distribution. So my thought process is, within this, the second distribution, somewhere towards the bottom band where that volume is pretty freaking heavy, that is realistically around 380 to 400 here on the NASDAQ. That's where I'd expect to see the buy side come in to see that kind of continuation, right? I'm looking for that kind of continuation from that triple distribution. So the high probability is that we actually hold the middle band. If this thing gets disrupted, then a lot of the momentum can get disrupted on the sequence to the upside, right? Like over here, realistically, we have the bottom band where, yeah, okay, we could potentially trade it from the bottom, but I want to look at this as it's intended to be looked at with this kind of different volume profile shape. So generally speaking, right, if we look at the NASDAQ from today's session, what happens? The low of the day on this triple distribution happens to be around that 400, right? If we move this along, we compare the two side by side, you have the movement into the triple distribution right over here. That's the low of day. It bounces down, it holds, bounces down, it holds. And one of the big things that it creates is a massive cluster of all this negative delta that allows us to look at this and say, you know what, this thing's super stuck at the lows. Our thesis based on our distribution shape makes sense. Okay, let's look for that long continuation. So in terms of volume profile shapes, those four are my favorite that if they appear, right, I'll take them in relation to the overall larger distributions and profiles and try to understand how we can trade these, right? Looking at reversals, the expected moves, double distributions, and triple distributions. These four, I think every trader, especially volume profile traders, need to have in their arsenal to get a better understanding of what's going on in terms of directionality, movement, and what your potential areas. This is the best part, right? They give you areas to actually trade from. So a quicker little breakdown and understanding of these volume profile shapes. And I think you guys can take this information, apply it to your volume profile analysis, and see how things look very attractive and shape up. So I hope you guys really enjoyed this video, learned a lot, and remember, drop a comment down below. Let me know, do you guys use these shapes? Do you guys trade volume profiles? And remember, check out community.tradeproacademy.com for our open Discord for more free resources like this one. So I'll check you guys in the next video, and we'll chat soon.